Mark Sturdy here with this week's highlights of 7 Days Ahead's analysis, week of the 7th of June 2022. Let's look at the summary. We are interested in the dollar yen. We think the dollar's pause in its strengthening against the euro and the sterling is one thing, but that the chart of the dollar yen suggests the yen is going to go on weakening and the dollar looks strong. Let's go straight to that and point out what I'm saying. Look, this red wedge drove the market higher, continuation pattern wedge, drove the market higher, broke through the prior high 125.85 from 2015, and even though there was a pause, it looks like the market wants to go on. It's a strong market for the dollar and a weak market for the yen. If we look at the day thing, there is a moment to sell yen, and I think it's on a break up through here on the day chart. Nonetheless, for the VAT, it looks as if it wants to continue. That trend does not want to reverse. Looking at stocks, S&P has rallied and is now up against good resistance. But the chart I want to highlight this week is the Euro Stoxx 50, which really shows how much more there has to be done by the market to look good. So there's a question mark over whether we're broken down through those prior highs. I agree. We need to look on the we closed right in the middle of them at the end of that month there, and we need a good solid close beneath that before it looks unambiguously bearish. But look at this weekly chart. I think it's very telling. The market has rallied and failed once, rallied and has to break up. It's not until the market can get above 4,000 in the Euro Stoxx before any sort of bullishness can be taken for granted. Contrast that with, for example, the Nikkei 225. Here we have the very, very powerful bullish long-term pattern, the pullback to support and the bounce, and the moment of truth here as to whether this market can break up through this downtrend. It looks poised to go better, but we do need a close on the week above that diagonal, I think, to give us confidence. Perhaps it's all driven by this key reversal down here, perhaps not. That may have been the starting gun for the rally. We need the rally to break up through this, but if it does, the yen is looking, the Nikkei is looking good. Going to bonds. We are impressed by the continuing bull market in yields, higher yields in the German bond and the UK gilt. Here we are, the pause in the German bund over a number of weeks, perhaps 2 months, 1.5 months certainly, has been ended by a big quick rally in higher yields. This market does not want to retrace. The move from higher yields that started at the beginning of 2022 is continuing with no sign of pullback. In the price chart, for example, there was a slight pause, and that in the last 10 days has emphatically been rejected, and we're going to lower prices, higher yields. So the same for the gilt. Look at our charts there for the subscribers. They will see our levels, but the gilt is similarly pushing on down in price terms, higher in yield terms. As regards commodities, we are interested in the oil. Oil has now, this is not conclusive, it's a quarterly bar chart. Were the market to close above here, that would be conclusive at the end of June. We've got 3/4 of a month to go yet. So, but turn to this, the weekly chart, we have closed above this prior high more clearly. Here, the weekly July contract closed above last week. This looks like a breakout to me and looks impressive. Added to which, the bulls will get becoming more and more excited by this possible head and shoulders reversal, continuation pattern here, which suggests very much higher above 160. So the breakthrough of the prior high plus more confidence being placed in this suggests bullishness in the oil, and gold is intermediate. Nothing to go for there. Thanks very much.